joint meeting of the Wilmette Police Pension Board of Trustees and the Wilmette Firefighters Pension Board of Trustees. This meeting is being held on Thursday, October 22nd, 2020, commencing at 3:34 p.m. in the afternoon. At this time, we will call roll for both pension funds. I'll turn over to Fire to call roll first.
Mr. Canning.
Here.
Ms. Malloy.
Here.
Mr. Mitchell.
Here.
Mr. Weglars. Mr. Weglars is not answering. I'll shoot him a text. Mr. Grajewski is present, so there's four present.
So there is a quorum for Fire. Over to Police.
Pat, can you do the roll, please?
Yep. Mr. Farina?
Present.
Mr. Kenzel?
Present.
Mr. Collins? Here. Mr. Sokolnik?
Here.
Can I ask, does somebody have both their, have you called in and have you signed in with Teams? Because that's causing the echo. Okay.
Mr. Paulson?
Paulson here.
We have a quorum with police. Back to you, Chris.
This meeting is being conducted remotely via Microsoft Teams. For those watching this video in the future, effective June 12th, 2020, Public Act 101640 enacted the Governmental Emergency Administration Act, which makes permanent changes to the Illinois Open Meetings Act. Under new Section 7 Sub E of the Open Meetings Act, public bodies may now conduct remote public meetings by audio or video conferencing without a quorum physically present when the governor or director of the Illinois Department of Public Health has issued a disaster declaration related to public health concerns. This meeting is being broadcast live on our local cable access channel 6. It is also being broadcast on the internet on YouTube Live, and the URL for that is www.youtube.com/user/villagewilmette/live. If you would like to participate in the meeting, you may use the Microsoft Teams app on any device for free. No sign-in is required. The link to join each meeting is posted on the website calendar at www.wilmette.com/calendar. The meeting will be archived on the village's website, as we do with our other televised public meetings. A remote meeting obviously requires a different mechanic for public participation. So to ensure that our residents, business owners, and other interested parties have the opportunity to participate in this meeting, we have solicited public comment prior to the start of the meeting via email. If members of the public who are watching the broadcast would like to participate during our designated public comment periods, you may submit your comments through YouTube Live at the appropriate time, and a member of the village staff will read your comment to the pension boards. All comments to the pension boards will be recorded in the meeting minutes, as we typically do. Everyone who will have joined the meeting today will be muted. When it is time for public comment, those joining us with the Teams client can toggle their mute status by clicking on the microphone icon on the meeting toolbar. Those joining us by audio conference dial-in can toggle their mute status by pressing *6. Only attendees can unmute themselves. No one can unmute another attendee. And just a reminder, the public comment can also be provided by emailing publiccomment, that's all one word, @wilmette.com, or through the village's YouTube live stream. Now, before the meeting, Pension Board trustees received a packet of agenda materials. And I can tell you that agenda packet was 430 pages long. These materials are also posted on the wilmette.com website so that residents and other interested parties can review the very same materials we have reviewed in preparation for this meeting. So, having that as a preamble, we'll now move on to the full agenda. The next item on the agenda is public comment. Lynn or Melinda, do we have anyone who wants to make a public comment?
There are no emails with public comments, and there are no comments on YouTube Live.
Okay, and then do we have anybody else who's dialed in?
It looks like our only two people on the phone are Jeff and Tom.
Okay. Okay, well then, seeing no one for public comment, next item on the agenda is approval of minutes. First one is police. Dave?
Dave, just so you know, you're on mute right now.
Sorry, I
It's
double
okay.
hit the button. Sorry about that. We have two sets of meetings to approve. The first is from the joint meeting of July 23rd, 2020, which is in page 7 of your packet. I'd like a motion to approve those minutes.
I'll make that motion.
Okay, can we get a second?
Collins.
Second.
Jeff,
Okay.
Kinzel.
Yes.
Any changes, corrections, or modifications to those minutes? Hearing that, take a roll call vote for the approval of the minutes. Farina is a yes.
Mr. Kinzel.
Yes.
Mr. Collins, yes. Mr. Sokolnik.
Yes.
Mr.
Minutes.
Paulson.
Yes.
The minutes are approved. I also would like everyone to turn to page 14, which is the police special meeting of September 1st, 2020. There's a set of minutes there to be approved. Pat, did you send out some additional notes today? I saw in the email, or is there something else, or that's the final minutes in the packet?
That was the final minutes in the
Okay.
packet.
Okay, so can we get a motion to approve the special meeting minutes?
Motion.
We get a second?
John will second.
Okay, roll call. Farina is a yes.
Kinzel.
Yes.
Collins, yes. Sokolnik.
Yes.
Paulson.
And Paulson's, yeah, yes.
Okay, so the second police special meeting notes are approved. Back over to you, Chris.
Okay, next item on the agenda is the approval of the minutes of the fire pension meeting on July 23rd, 2020. Is there a motion to approve?
Motion.
Okay, second.
Second.
Okay, it's been moved and seconded. Any comments, clarifications, modifications, or amendments? Hearing none, roll call. You want to take that, Dave?
Mr. Canning.
Aye.
Roy.
Aye.
Mr. Mitchell.
Aye.
Mr. Grzewski. Aye.
Okay, so those minutes are approved. Okay, next item on the agenda is the appointment of a FOIA and Open Meetings Act officer. Melinda, do you want to introduce this topic?
Sure. In the packet, there was a one-page explaining that we need to designate somebody. This has come to our attention as we have gone through an IDOI audit. And it was also something, as people might recall, in the rules that have been suggested from our outside attorney, that this is something that we should designate. I think in the past we have looked at the secretary and on each of the boards as the one to be responsible for these duties. We know that we also have all of the folks make sure that on an annual basis we're complying with our training for the FOIA and OMA Act. So I think we need to take steps to actually designate officially the individual who is responsible for this.
Okay, on fire, are there any nominations?
Hey, Chris,
Yep,
can we designate a position?
such as,
Like, for example, can we just move to approve the designation of the police pension secretary as the officer responsible for ensuring compliance with the OMA?
I think that would be fine.
Because then we don't have to worry about, it's always the secretary's job.
Yeah, I mean, I was more concerned about, I don't think it should be a civilian as opposed to someone who's actually working for the village, because you have a better access to some of this than we would. But I mean, I think that's fine. Melinda, do you see any problem with that?
No, and I think it will help clarify things going forward. And then when we talk about the rules that we promulgate eventually, that maybe that's what we put in our rules, that it will always be the secretary's responsibility.
All right. Do you want to make a motion to that effect, Melinda?
Sure. I move that.
On the fire side.
Yep, for fire, I am moving that the designation of the Freedom of Information Officer and the OMA Compliance Officer is always going to be the Secretary of the Fire Pension Board.
Mark, you want to second that?
Second.
Okay, any further comments? If not, Dave, can you call roll on that?
Mr. Mitchell,
Aye.
Mr. Canning,
Aye.
Ms. Malloy,
Aye.
Mr. Krajewski, aye.
Okay, that's approved on the fire side, please.
Okay, so I'm gonna move that the designation of the Freedom of Information and Compliance Officer will always be the Secretary for the Police Pension Fund. Can I get a motion on that?
Motion.
Can I get a second?
Second, John.
Pat, can you call the roll?
Mr. Farina,
Yes. Aye.
Mr. Kinzel,
Aye.
Mr. Collins, aye, Mr. Skolnick,
Aye.
and Mr. Paulson.
Aye.
Okay, anything else, Melinda, on the reminder of the Open Meetings Act and Freedom of Information Act training?
No, they're in the packet on page 17. There is the information that lays out, again, it's a link that you go to. This is something that needs to be completed annually. It should be done before the end of the year. So this is no different than what we've talked about in prior years. So it's just a reminder to get both your FOIA and OMA training done.
Okay,
And when those certificates happen, please make sure that you send myself, the secretary of the boards, and I believe you will also need to send it to Karen Norwood with the village, just to make sure that we're all complying.
okay, thank you for the reminder. Moving on to approval of new pension members. On the fire side, we have one new member, Lou Clausing. You have the information in there about his pension.
Right, so this is an initial increase for Lou. Are there any questions?
Nope.
So that was on page 19.
Yep.
And then the other item that comes after the police is the information that we received from Lauterbach and Amen in regards to Mike Wessel and his application for reciprocity as he has moved to another fire district. This was something that we had discussed in January, and we had approved having Lauterbach and Amen run the calculations for us. You will also see in your packet on page 23 that Mike filled out the notification that he needed to give us that he was in fact going to follow through on getting reciprocity. So he is currently in the process of having the funds sent to both the Wilmette pension fund as well as the other pension fund that is involved. We have not received those monies yet. So as this process continues, I will keep you updated. Are there any questions?
Okay, that's it on fire. Over to police.
Yeah, we just have, I think we just have two deaths of pensioners. Nothing to do there, though, right, Melinda?
No, but I just want to state for the record that the one individual's name was misspelled.
That's what I thought.
Yes.
That's Clemmy.
So that, Pat, I'm sure you'll pick up in the minutes so that everyone knows the correct spelling of that individual's name.
Yeah, you have Robert Lamatia, then Clement Stoker. And then we also have a notification on the refund.
So that was not an item that's on here, but Pat, I think as you and I had talked, you just kind of wanted to bring that up to folks just so they know. It will also be discussed at our next meeting as well, but I think it would be a good idea just to let folks know what's going on.
So probationary police officer Vincent Beck resigned from the police department as of October 5th. So we'll send him a letter stating, basically asking him how he wants to do the refund of his contribution.
Okay,
So again, that will get picked up in our meeting in January, since that was happening in the third quarter. But again, since we were privy to that information right now, it's, as Pat and I talked about, it was just a good idea just to give folks a heads up.
okay, nothing
Okay.
else on the police side.
Okay, moving on to approval of disbursements. The fire one is at page 24. Anything unusual? Everything looks pretty straightforward.
Yes, and then just like we talked about a moment ago about the calculation that was performed by LNA, you're going to see that that's the payment that we made in order for them to perform that calculation.
Okay. Okay, is there a motion to approve the disbursement?
Motion.
Is there a second?
Second.
Okay, it's been moved and seconded. Any further discussion? Otherwise, please call the roll.
Hanning.
Aye.
Ms. Malloy.
Aye.
Mr. Mitchell.
Aye.
Mr. Grzewski. Aye.
Okay, so the motion carries over to police.
Yeah, page 25 for the packet, you'll see it's just standard fee payments. Can we get a motion to approve the distributions?
Motion.
Get a second?
Second.
Okay, roll call, please.
Ms. Farina,
Aye.
Mr. Kinzel,
Aye.
Mr. Collins, aye, Mr. Sokolnik,
Aye.
and Mr. Paulson.
Aye.
Okay, Melinda, could you take the next three, which are the presentation of summary of cash bank accounts activity, which is page 26 of the packet, followed by presentation of cash flows, and then notification of filing of annual statement to the Illinois Department of Insurance.
Sure, not a problem. So if people could start with page 26. As we always do, we review sort of what our balances are at North Shore Community Bank. If I could call your attention to the transfer that happened, and we'll talk more about this again, both in the cash flow as well as when Tom gives his presentation. If you remember from our last meeting, we had agreed to move $500,000 from Vanguard S&P to Weaver. So we took it from equity, we moved it to fixed income. In order to affect that transfer, it needs to flow through North Shore Community. So you're going to see $500,000 coming into the bank. That happened at the end of the month, and then it moved early the next month. So it's just a matter of days so that's why you see it come in one month and go out the next month. It was just the timing of when it came in and moving the monies out then. So you see it go in and you see it come out. The other thing I'd like to call your attention to is that in the month of August, you'll see that there was an additional contribution from the village, and that is from their reserves. We've talked about that before, that as we move along the path of getting to a 15-year rolling amortization, this was our first year in moving towards that, and the village not only increased the property tax levy to help affect it, but they also decided, in terms of managing the increase in the property tax levy, to use some of the reserves to make the contribution that we were required by the actuary. So that is the additional amount that came through. So the tax levy monies are coming through. There was an additional payment made from the village from their reserves. Those two amounts together equal what you will see later on in the actuary reports, were the required employer contribution based on the assumption that we are moving forward with a 15-year rolling amortization. Are there any questions? Hearing none on that, then if we move to page 27 and you look at the cash flow, a lot of this is going to look similar to what you see in North Shore, because it's trying to give us, it's not only showing you the actuals that have happened, but the projections going forward. We use this as a way to understand whether or not we are going to need to tap into any of our investment income in order to be able to make our pension payments. You're going to see between now and January, we are estimating that both pension funds should have sufficient cash to be able to make the needed pension payments. Are there any questions? If you would turn to page 28, at our meeting in July, I was able to tell you that I knew that the Department of Insurance had accepted our annual filings, but the certification had come to some of the members. All I'm doing is giving you both pension funds the official notice from the Department of Insurance that our annual reports were accepted. Are there any questions? All right, then seeing none here, I think then the next thing we want to turn to is the investment report section.
Oh.
So Chris, you were on
So that
mute there,
would-
I think.
Sorry, go ahead, Tom.
So that would start on page 142. Melinda included all the information that we provided, but for the sake of time and focus, we'll start on page 142 and go through the notes there. So it's okay. So on the first page of, or going to page 143 is a summary of recent action. And at the July meeting, we identified cash was sufficient for payroll. There was a direction to sell 500,000 of the S&P 500 Vanguard and move those proceeds to North Shore Bank and ultimately Weaver for investment. That was done. And there was a direction to form an investment committee to review Lazard Emerging Market and London Small Cap. We'll discuss that today. I didn't prompt that action, so I've included that information, and we can discuss how to get at it here today. From the May meeting, which we still have in place, are these orders for the S&P 500 at some of these levels here. If you can see that on page 143. And I think, you know, we probably want to discuss if we want to leave them in there, take it out, or how we want to proceed from here. And you know, if we go to page 145, this is a chart of the S&P 500 that you know, might help us see if we want to continue with these orders and or at what levels here. And so, but you know, we're all familiar with what happened in March, and then the swing upward over the last few months, and with the police pension fund and the fire pension fund participating by buying in at certain levels there, and you know, the market hit a high of around 3580. It pulled back in September to about 3200, and it's bounced back up, and it looks like it's in some trading range here short term, and looking maybe for this economy to catch up with what, you know, where the valuations are. If you go to the next page, this gives a look at the returns on a year-to-date basis for U.S. equities as measured by the S&P 500, up 5.6%. For the last 12 months, U.S. equities are up 15.1, which was, you know, who would have thought? International stocks have not fared as well. The year-to-date international developed markets up 5.1, and on a one-year basis up 3.4. Emerging market is year-to-date it's just under 1% loss, and the last 12 months up 10.9, and but it's beginning to perk up in reference to some material cost and inflation in that regard as far as demand's concerned, and China's economy is rebounded fairly significantly. In the global fixed income, you had fixed income returns year to date 6.8 for the Barclays U.S. aggregate, and for the 1 year at 7% as far as the 1 year return is concerned. Alternative investments didn't really provide the diversification and the support you might want. REITs were down big, commodities were down, master limited partnerships got crushed. Hedge strategies somewhat up 4.2%, and cash the last 12 months was 1%. The last year to date is 60 basis points, and cash today if you look at the 3-month Treasury bill is probably 2 basis points or 3 basis points. So, if we go to the next page, this is the GIC Weekly, which is we're trying to get out to everybody on a weekly basis, and we came out with our most current one recently, but the fact that we try to get the reports to the board beforehand, but if we go to so if you look at page 149, and the one challenge that's coming out here is that the 10-year Treasury is currently at about 70 basis points. And the normal allocation, let's say 60% equity, 40% bonds. And the reason you have that is why? Is so that you can, the normal thought is stocks go down, bonds go up, flight to safety, there's that diversification. And so some of the work was done, and this doesn't show right here, but the most current GIC Weekly does show that if you had a 10% decline in stocks today, to offset that, you'd need to have a negative 70 basis points on a 10-year bond yield. And, that's pretty big. And it just reflects the fact that diversification from bonds is more difficult to get. If you looked at, let's say, in 2018, the 10-year bond yield was at 2.99, called 3%, and they, dropped to 1.2% for that 10-year yield would have protected on a drop of the 10% for S&P. The long-term yield on bonds, going back, is 3.5%, 4%, which provided for some diversification. So it's harder to protect the portfolio and with these low yields as far as the diversifying is concerned. And if you go to where are we at here? So, okay. If you go to page 151, and it's our firm in general believes that the V-shaped recovery in the economy is still what's going to happen, and the generally, the idea that the thought about this is that we've got further fiscal stimulus. The momentum in China is filtering across the world, including the U.S., as far as their economy is concerned. There is a significant amount of money supply that has been put into the economy, and also the COVID-19, as far as the vaccine that should be coming, and we'll talk about that in a little bit. But there is concern that's out there, and as far as the market, there's always a concern about something, but there's anxiety about the presidential election. Actually, there seems to be some clarity coming out of there. But the bigger issue with the election is that if it takes longer than 2 or 3 days to figure it out, there may be a negative uncertainty for the marketplace. And what's the makeup of the Senate in reference to the moving from Republican to Democrat, and what that might mean to some of the policies. If you look at on page 151 and the returns for global equities, U.S. large cap growth for 1 year was up 44%. That's great. And then the 1 year return for value stocks was negative 1.51, almost a 45 percentage point spread between growth, the go-go stocks, and the value stocks. And it goes right down the line of, from mid-cap growth to value, negative returns for value, positive returns for growth. And the reason for pointing this out is that, there's going to be rotation, and there's going to be a rotation in the market where, the technology stocks, the giant tech stocks, their valuations are definitely extended. And partly because they demand, if you look at Microsoft or Zoom or, some of the companies like Peloton, they've run their business with their own motor. They don't need the economy it's like a motorboat. They've got their own power as far as their earnings are concerned. And the normal, not normal companies, but companies who need economic growth for the profitability, Caterpillar, Deere, PACCAR, companies like that, they're like a sailboat. They need the wind at their back. And the idea is the economy rebounds, those companies' earnings will rebound and rebound substantially based upon their margins expanding. They've cut costs significantly. So I think, what we don't have if you go to page 152, we don't have a short-term, thought on the market except that it's extended, and it's probably going to be in a trading range, which would be good. And if you look on page 152, our base case for the market is 33.50, and we're already there. And that's for June of 2021. On a bullish basis, it'd be 3,700. And the third quarter for GDP for the economy is our estimate's up 36%. That's versus a negative 35% for the second quarter. And looking at the economy coming in at about a negative 3% for the year. So I think we see spots of real. I just looked at the Beige Book just came out, and housing, construction, hobby type of businesses are doing well. Entertainment's not, and so it's maybe it's not a V-shaped recovery, maybe it's a K-shape. But one of the concerns I have, at least I look on page 153, is looking at the Treasury benchmark. The 10-year bond is currently paying 70 basis points. Actually, it's up a little bit from there, but the current coupon that is on the 10-year Treasury is 70 basis points. At the beginning of the year, it was at 1.92. So you can see it's 2 columns over the change from the beginning year. The yield on the 10-year Treasury went from 1.92 to 70 basis points. And as a result, the valuation of those 10-year bonds, the next column there, the total return was up 12.38. Total return would be the coupon they pay plus the appreciation. That's great. But the opposite would happen if rates went the other way. If rates went back up to that level there of 1.9, you'd have a valuation would drop approximately 12% on the 10-year bond. And so, rates are so low, it's how much lower can they go isn't a forecast, but it does create this extra risk for fixed income, because the risk on fixed income is related to what the duration is, and the duration is measured by the coupon and maturity. So the higher the coupon, the lower the duration. The duration of the 10-year bond is the highest we've seen. So if or put it differently, if rates don't do anything this year, they don't go up or down, the return on the 10-year bond would be 70 basis points. Hardly, worth some of the risk that we see there. Staying on the same page, at the bottom of page 153 is our forecasts for gross domestic product in 2020 and in 2021, and then looking at our forecast for the 10-year bond yield, and then also inflation. And it's great. These are forecasts. Probably 90% of the time they're off, but they're a guidepost, and we're looking for gross domestic product to be down 3.6% for this year, which isn't good, but you would think it'd be a lot worse as far as the forecast is concerned. And next year they're looking for a bounce back of 5.5%, and the rates on the 10-year at the second quarter of 21, we're looking for it to edge up back to 1% from 70 basis points, which it's a 30% increase. It's not a lot, 30 basis, but it's actually a little bit more than that. So, and then inflation, we don't, it's right now 2021 at 1.1, but we've got a forecast of 2.2, which is a target by the Fed, which inflation may be out of the bag already, and so we've got the largest money supply out there. Any questions on this, or thoughts, or comments? Okay. So I do want to spend a moment on the next page. I am not a doctor. I don't play one on TV, but I just thought that this is we get this from First Trust every couple of weeks, and it's a tracker on the COVID-19, and it gives a perspective. And I think that because this is a financial crisis caused by a health crisis, and one of this chart here, the first one on the top left, does suggest that we're seeing cases drop from the peak in July. We have some spike up here near term. I don't know if it's going to go back to the height of July. That's left for the experts. But what we have seen is that even with the spike, you don't see as many deaths. You don't see the death spiking, and I don't mean to minimize that at all. It's just the idea is it's a virus, and so you don't want people to die, and it has to work its way through. But also right below that chart is a look at the phases of where the vaccine is. So right below this information. So in phase 1, there's 27 companies that are vaccine testing for safety and for dosage. There are 14 companies in phase 2 that is an expanded safety trials. There are 9 companies in phase 3 that have vaccines and large-scale efficacy tests, and 5 that are approved for early or limited use. And currently no one has a vaccine that's out there. And and unfortunately, on the top right of this, it's a chart. The orange represents the percent of total deaths from the COVID-19, and the blue is the percent of population. And unfortunately, the 80% of the deaths are represented by 18% of the population, people over 65 years old, and it's the message out is to keep that segment of the population safe, and which is hard, but at the bottom of this page is a look at the occupancy for hospital bed occupancy for the COVID-19 patients. And the idea of shelter in place before closing businesses was to flatten the curve, and it looks like we have capacity, and I'd like to think that the next 3 months it may I think we're better equipped to deal with this. We as far as continuing doing business, delivery of product, even restaurants have adapted to it. So I think that's one reason we're somewhat optimistic, and we're looking beyond this year to have some resuming. You probably won't have unemployment back to 4% for another couple of years, and so. Any questions on that, or thoughts, or comments? Okay. So on page 155 is your current asset allocation for the portfolio, and this includes the North Shore balance. And so, right now, the fire pension fund with North Shore balance is $52,338,000. And for the police, it's $53,004,9817. And looking at the purpose of looking at this is to see where we're at as far as making sure we're under that 65% by year end. And we're currently just slightly over, maybe $100,000 over. And last year, what we did is with the board and with their approval, we looked at this in mid-December, I think it was, Melinda, and then based upon what we were over allocated, we rebalanced at that time period and sent that money to North Shore account until we reviewed it at the January meeting. And
Correct.
I would suggest that we should discuss that now, or how we want to proceed.
No, I think now would be a good time to talk about that.
Okay, so again, the suggestion is for Melinda and I to review this in December. And I think I'm just pulling the calendar out.
So as Tom is pulling that calendar out, hopefully everyone's going to recall the discussion that we had last year at the same time, and we usually have this every year. So we know statutorily we are required to have no more than 65% in equity. That's why we review this chart now on a regular basis. And the stance that we took last year, our cash balances at North Shore were different than they are this year. We could actually see that we might possibly have a cash need. We don't see that this year. However, depending on what happens with the market, one way to get the portfolio rebalanced is if we wait until mid-December and take a look at where we are at. Last year, you gave the authority to myself and Tom to get ourselves back into the position that we needed to be by moving the cash into North Shore. And then in January, when we met for our first meeting, we had a chance to talk about what were going to be the next steps we might want to take. So I'm looking to see if that's where folks would be comfortable, again, to allow us to make sure that we are actually within the required allocation that we need to be for the Department of Insurance filing.
Yeah, Melinda, looking at our allocations, the large cap, given how well it's performed, is actually the one that's most out of kilter. So I would suggest that, assuming things don't move dramatically, which, given this market has happened in the past, that we take that money from that fund and move it to cash. And, assuming things don't, like I said, change dramatically, but otherwise give you that authority.
And I would concur with that.
Okay.
All right.
Yeah, this is Jeff. I agree.
Okay. So I think we would need to make motions in both funds and then vote on it.
Okay.
You want to use what we used last year with a little modification of the large cap thing?
Sure. You have that handy, Pat?
Yeah. Do you want me to motion?
Yeah, motion it, Pat. Go ahead.
Mr. Collins motions to give authority to Director Malloy and Mr. McShane to rebalance the allocation of the Wilmette Police Pension Fund to the statutory requirement of 65% equity and 35% fixed if the allocation for equity is over 65% at year end by taking the overbalance amount of from the large cap.
Yes, the Vanguard.
Large cap equity.
From the large cap equity Vanguard and deposit into the North Shore Community Bank Police Pension Fund account.
Okay, so I'll make a move to approve, a motion to approve that motion. A second?
Second.
Okay, Mr. Kinzel, second. Roll call, Pat?
Mr. Farina,
Yeah, aye.
Mr. Kinzel,
Aye.
Ms. Collins, aye. Mr. Skolnick,
Aye.
Mr. Paulson.
Aye.
Okay, the motion carries. On to you, Chris.
Okay, Mark, do you want to adopt the language of the motion that Pat just made?
Yes.
And Melinda, do you want a second?
Yes, I do.
Okay, it's been moved and seconded. Dave, call roll, please.
Mr. Canning,
Aye.
Ms. Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Gajewski. Aye.
Okay, and that motion carries.
Okay.
Back to you, Tom.
Okay, very good. So we'll go to the page 157, which is shows the asset allocation of the portfolio for the funds that we have at Morgan Stanley, not including the North Shore accounts. And from this, it's a little bit distorted as you show over 68% equity. Which doesn't take into account the cash at North Shore. Looking at the bottom of the page, as Dave has indicated, most of our over allocation is in the large cap, and so and we're pretty much on target for for the small cap emerging market and international equity as well. Looking at the next page, just again is the on page 158. Looking at the who manages what. You've got Vanguard running large cap equity. You have two managers in the mid cap. This is the fire. The iShares Core S&P 500. I'm sorry, S&P mid cap and Columbia Acorn, and then small cap equity for the fire is London. And the small cap 600 ETF, real estate Vanguard REIT Index Fund, and then you have four separate mutual funds for international, American, Euro Pacific. It has 3.2 million. iShares Core has 984,000. Tweedy Brown 874,000, and Jochum International is 1.1 million. Emerging market is American New World and Lazard Emerging Markets. American New World has 1.2 million and Lazard 2 million. And then you have three managers, Weaver, which has got a special assignment of 60% bonds and 40% governments. And then you've got Spare Kaplan. The Max Flex is the shorter term portfolio, supposed to be a go anywhere portfolio, and the government entity or government corporate index is what the benchmark is for the Spare Flex fixed income. And if we go to the next page, just looking at a year-to-date basis, you're up 2.2%. You're able to sustain that return. The U.S. equity was up, actually 0.5% versus the benchmark negative, and international equity was up 1.3 versus negative for the benchmark. And then the emerging markets is at was negative 11.2 versus the benchmark of 1%, and fixed income at 7 versus 8. That's on a year-to-date basis. If you look at the next page, you can see, just say looking at the last 12 months, you're up 784 versus 789. The S&P 500, your S&P 500 is up 16 versus 15. It's an index fund. Your excess return came from, those purchases you made at lower levels, increment levels there. Looking at, Columbia Acorn up 19%. A little bit behind their benchmark, but compared to mid cap, which was down, they did very well. London small cap continues to underperform, very disappointing. It's time to move on from them. And they got a good outfit. So nothing's changed. It's just poor stock selection. Looking at American Funds International, they provided up 14.9 versus 3%, and the Joachim International was up 23% versus 49, and then the index was up 1.26. So you had help there. Tweedy Brown, value manager, we understand what's going on there. The value stocks that just have not participated, and American New World is emerging market up 14.5 versus 11%, and then Lazard. And so, that's pretty much the breakdown there. And then, any questions on that? So, taking a quick look at, do I have it? So looking at page 168, this is for the firemen. And, since inception, the fund is up 6.61% versus 671. The beginning market value back in 03 was 20,281,000. Net contributions, withdrawals, 8.1 million. Fees and expenses of 768,000. You've had income from dividends and interest of 17.1 million. Gains and losses of 21 million. Those are realized, unrealized. So you've got earnings over that time period of 38 million on beginning balance of $20 million. So, and I think the police is behind this. Yes, and that's pretty much my report. And then just the idea of how we want to proceed on reviewing Lazard and the London. I did include information on both of those. We can table it for another meeting and do it in January, or need some guidance. I was assigned to reach out to Jeff and Dave, and I didn't do that. It's my fault. I apologize.
So I think, Tom, it makes sense, given the material that you have in the packet, for us to review. And depending on how the trustees feel, given their understanding of what's going on, we can make a decision then if folks are comfortable with taking action, or if they decide that they need to table it for further consideration. But I think one of the things that you've laid out pretty clearly is that both in the small cap space and in the emerging market, if we look at the performance of these two entities compared to the benchmark, there is definitely room for improvement. So we know that we need to consider something. So unless one of the other trustees feel differently, I think Tom should go through the material that they've provided and help educate us in terms of what the potential guidance we can get from that material. Does anyone feel differently?
I agree with you, Melinda. To handle it
No,
now.
I think we got to go ahead.
Okay.
So if you go to page 196, please. And on page 196 this is related to Lazard, and we did a analysis, a side by side. It's Lazard, American Century, American Funds New World, which you currently hold. Causeway and J.P. Morgan are the company that we've thrown into the mix here.
Wait,
and,
Tom, can I stop you for a second? Because I think you said
sure.
196. Did you mean go to 182?
No, go to one. I'm sorry. It's starting at 196 and go to the next page, 197. I'm sorry.
That's okay.
197 now. And so on page 197 is a list that starts with Lazard Emerging Markets, American Century, American Funds, Causeway, and J.P. Morgan.
Yep.
Okay, so, and they are, you can, see their expense ratio for each one of those. And you can see what the amount of money that they manage. The American Century is 2.7 billion versus the New World is 447 billion. Causeway is 3.4 billion, and JP Morgan's 11 billion. Going to the next page.
Tom,
they're
can I
all-
stop you for a second? Can you
Sure.
clarify the American Funds New World that is here? Is that the same one that we already have in our portfolios?
Yes.
Okay, thank you.
Yes. Sure. So on the next page, again, gives a perspective of, they're all in 90% in stocks. There's no really dispersion there. And then global exposure, one thing that we, that we know, or at least, the American New World does own 23% of U.S. stocks, and their guidance is that they can own U.S. stocks if they do at least 25 or 20% of their business in emerging markets. And so that's a one outlier there. J.P. Morgan, and the others are pretty much fairly in non-U.S. and predominantly in emerging markets. 70% for J.P. Morgan, 74 for American Century, and Lazard has pretty much been in the same category there.
Hey, Tom, for edification, when it says non-U.S. markets and emerging markets, so a non-U.S. market would be, for lack of a better term, like a UK or Germany, and the emerging market would be
right.
Emerging market. Okay, I just wanted to make sure I understood what the terms meant.
Right.
Thank you.
Yeah. Yes. So, and then on the page 199 is the regional exposure as far as countries are concerned. Gives you perspective on that. I think that Lazard is, Lazard has a good team, good outfit, but they've had really poor stock selection. In 2016, they came back really well from a poor year, and since then they've not got even close to the benchmark. American Century, which is the second, begins with the symbol TWMIX, just as a point of reference. Their team is a little bit short in experience, and versus the other American funds, which is the RNWGX that we own, has a big team. They're just note that if the pure emerging markets take off, they're going to lag because they're outside that. And the last column is JP Morgan. These guys have done very well recently, and they've got a team that's been together since 2013, and they run that portfolio on some buckets. They stocks that are premium, quality, and trading stocks, and so just that's a little perspective on that. Looking at page 200, most of these firms, their top holdings is China, except for American New World. It's the U.S., and their second largest holding as far as the country's exposure is China. And then you can see some of the other countries that they have that's there. And then if you go to page 201, that has the style analysis. And so, the reason, not the reason, but so looking at this, you own RNWGX, which is the New World, and so they're a blend to kind of growth. You can see that 49% is the style is in the growth box, and that's also true with J.P. Morgan, the last one on the right, JEMSX. They're 49% growth, and so though they're more purely emerging market, and American New World is slightly into is in the U.S. of 25%. So the more balanced one on all those would be that Causeway, CEMEX, and which is more of a balanced portfolio as far as returns or as far as their style is concerned. If you go to the next page, 202, you can see some of the attributes, the characteristics of each manager. So Lazard, the PB is for price to book. So they're selling their stock that they have sell at about 1.2 times price to book. And the PE ratio is 11.5. PE ratio is 11. And you can then, if you look American Century, their price to book is 2.3, and their PE is 18.9. And American Funds New World is 2.5 times book, and their PE is 25.5. Causeway is 1.1 times book. The PE is 11.8, and JP Morgan is 3.7 times book, with the PE ratio of 26.6. So, when not even looking at returns, just looking at valuations, the Lazard and Causeway are definitely more of a again, value type of manager, and they're buying those securities at a cheaper level, or they're buying securities that are trading at a closer to book value, and whereas the other companies have are more let's say aggressive and more growth orientated. Any questions on that or thoughts on that particular item?
Tom, just a quick question. What, if anything, can we take away from the number of securities that they have and then the percent of top 10? Can you talk about those two columns?
So, I mean, the number of securities. For instance, JP Morgan has 65 securities in the portfolio, which is diversified. I don't think it's concentrated, but they're more focused on those securities. There's maybe a higher confidence level, just like Lazard. But if they make a mistake, then it can pull down the portfolio. And so, of those 65 companies, that represents 38% of the of top 10, and that's okay. I mean, if you would say that if there's 50% of the top 10, they have high conviction levels. And this doesn't necessarily mean like American Funds New World has 384 stocks. Maybe less conviction, but they have a bigger research team. But the takeaway is that the most diversified or spread out is American Funds 384, and but none of these companies we have it. If it said 40 stocks, then I'd say it's a little more concentrated than we might want. It's just a reflection that they're over 50. I'm comfortable with the diversification. So that these are not. There's no red flags being thrown up here.
So Tom,
the number of securities, yeah.
So when I look at that, and I don't even know how to describe that chart. The one with all the boxes, with the
style box.
Style box, yes, thank you.
You mean the Rubik's Cube? That's what it looks like.
which you need a PhD in economics to figure this one out. But if we look at our two holdings, right? So if we have American New World, which is basically a blend and growth shop, large cap, and Lazard, which is a value owner, and we own equal parts of those. We're kind of, Lazard's, is it stock selection? Is it stock selection? Do you think, or do you think it's style? Because clearly they're a value manager, and we already have a kind of an aggressive growth guy in American New World. So we got a value guy who's clearly getting clocked here. But at the same time, we talk about rotation from value to growth, and at some point it's going to go back. Thoughts there? Because I hate to dump a value manager.
I know. I know.
What, and maybe we have the wrong value manager. And so the question is, is this a style issue? Or do you
So-
really think it's a stock
so-
picking issue? And then the second
the-
question is, if it is a stock picking issue, do we want another growth guy, or do we want another value guy to balance the growth guy?
Okay. So from the attributions we've looked at, it's been partly stock selection and partly country concentration or country selection, and that country selection has a bigger part in the returns for these emerging markets. And so they were in Russia, and that didn't work out too well. And then Brazil, they stayed too long. And then some of their selections in the other, the normalized countries also didn't, pan out that well. There is, and then so then the question about value would be, can you, stomach buying, say a balanced manager or more of a value manager that doesn't show good performance, and that would be like Causeway. Causeway is, it doesn't show well in the if you look at the performance of the portfolio over a period of time. And Causeway would be closer to, let's say, I would say more of a core manager, in the sense that if you look at those style boxes, they're fairly core. If you look versus Lazard is 50% value.
Right. I guess what I worry about, Tom, is we pitch our deep value guy, and maybe he's made some mistakes, and the world rotates back to value, and then we will have made not a good move. I'd love to hear what Jeff says. I know Jeff spends a lot of time kind of thinking about these things. Jeff, do you have any thoughts there?
And while we're doing that, do you mind if everyone looks at page 206? Because to your point, Dave, this is where it shows like rankings over time. So you could see at one point in 2016, Lazard had a high ranking, but it gives you some sense over since 2010 how these different folks have performed in the rankings, and maybe that sheds a little bit of light. But to your point, I would love to hear from Jeff.
Yeah, I mean, I agree with where Dave's heading, and I'm not suggesting we need 100% value, but maybe a mix. And my question would be for Tom is, how has Lazard, number one, how has Lazard performed relative to a value indice or value peers? And and similarly on Causeway, of course, they're more of a blend, so how they perform relative to blend. And are there any, are there good, there's got to be some, I assume there's some managers that have performed much better in the value style than has Lazard.
Yeah. So good questions, Jeff. And I don't know if we break it down to, we did include I don't know if we have a breakdown of, say international value emerging markets managers, you know what I mean? Mm-hmm. And and I just look at Morningstar, they use a diversified emerging market benchmark, and it's so I'd have to look further. I can't answer that question, And
okay, are there at least? I assume there at least has to be like an MSCI value index, growth index, and maybe blend.
Maybe I've never really dissected it like that for accounts, but yeah, we could look into it. I can't speak to that off the top of my head.
Okay.
And I'm bouncing around now, looking at some of that now, but I don't want to hold up. Let me just, so I can circle back with it. Yeah. I don't have
Okay.
the answer to that.
So I'm just going to throw this out there as an idea as we're, I'm hearing that maybe we want to look at a little bit more information and we don't want to totally abandon one of the managers having a value bent. So I'm just an idea. Since one of the managers that we have in this matrix that we're looking at is one that we already have, American New World, do we want to, in the short run right now, consider moving some of the allocation from Lazard to American New World so that you're still keeping a value position right now? But given how American New World has been performing, that we could revisit so it gives us a way to take some sort of action right now, and we could revisit this issue again in January. And in the meantime, maybe the subcommittee would have a chance to evaluate some of the ideas that Jeff has just raised.
Melinda, this is Dave from the fire side. I kind of agree with you, and I mean, just looking at it now with how bad Lazard's performed and American New World's done well, it's still Lazard's 60% of the emerging market, roughly, portfolio with how bad they've done. So, I mean, it was even bigger a year ago, and with American New World's doing better. I do agree that maybe if we do not want to choose another fund right now, at least balance those funds out.
I would agree with Dave. Lazard has just had a really bad run.
I'm fine with it. And I'm sorry, I probably could find it, but how much is in Lazard dollar-wise? Do we know?
Yep. So, as I'm looking at the fire, they were almost equal in terms of what each of them have. So give me a second, because I was just looking at that.
Lazard has in the fire 2 million, and in an American New World has like 1.29.
Yep.
So here's another crazy thought. Why? I hate to undo my last motion, but why don't we move some of that to cash and the rest of it to American New World, and then we're not like, as opposed to, I mean, I know we're out of whack on the, I'm the one that made the motion, but on the S&P. But if that's what we want to do, maybe we use that for our cash in the short term.
Oh.
I think a couple
Or is that
thoughts.
too complicated? We have to go and do an emotion we already did.
No, I don't think it's that. I think we're, I think emerging markets are going to, I mean, right or wrong, are going to do well over the next 12 months.
Okay, so we want to leave it alone, and then we don't want to under allocate for 3 months. Is what you're saying.
Right.
And then one of the ideas with the American New World, just so we're all, again, they have an exposure to the U.S. and the U.S. has been the home run hitter, and so Lazard is 70% in emerging markets as well as I think Causeway as well, and so I think it's really about this idea of moving from value to a growth, you don't want to be whipsawed. So the American New World is a safer bet as far as the being able to maneuver from say some U.S. stocks that do business in emerging markets, but Microsoft doesn't seem like an emerging market stock, and that's one of the stocks in there. But either is Alibaba, which is doesn't seem to be size of a company doesn't make a difference. So, but the so I would keep the exposure to emerging markets, moving some to American funds from Lazard, evening it out is certainly making a change. If you move, say, for the police 600,000 from Lazard and put it in the New World, and something along the same lines as the fire, that might be a step, and then you can kind of merge out a little bit. I'd be more for that.
This is Dave again from the fire. I mean, I guess when I was looking at your research and just looking at the quadrant chart starting at 208, Lazard was in the underperforming positive and negative quarters in every chart. You know, so that was the big concern. It was I didn't see any positive of staying with them, and that's over 10 and 7 years. And they're the only one that's in that negative quadrant every time. So, I mean, it's something I wouldn't be opposed to moving everything out of them, whether we decide on a fund or cash.
I mean, I don't think we need to move everything out of there from the standpoint of their relative performance is bad, but it seems unlikely that it's going to be a drag from the standpoint of a negative return. In other words, comparing it to cash. So, and on a different point, I just wanted to ask Tom for this is for down the road. With respect to American New World's position outside of emerging markets, do they have what's the limit, and what's their typical exposure to emerging markets? Because eventually, I think emerging markets is attractive, and I don't if they're going to be only 50% in emerging markets, then we can make the move now, but down the road, I would probably be against it long term.
Mm-hmm. Okay. Let me check on that question, what their limit is to,
okay,
if they put that limit. Yeah, U.S. stocks. Okay.
Well, non-emerging market stocks.
Right.
Could be U.S. or international.
Okay. Okay. So, okay.
So then right now, folks, do we want to take any action with respect to Lazard today?
On the fire side, Dave and Mark, what are your thoughts?
I would agree at a minimum balance that the funds, at least 50-50.
Okay.
Mark?
I would concur with that.
I'd go along as well.
Police,
So-
I mean, I think we've heard from, a couple of us, but Pat and you guys, any of the other guys want to say anything or any thoughts?
I mean, I like the idea of taking some out of Lazard and putting it into American.
I'd say I'm in agreement.
If we took, I'm sorry, I don't have the numbers in front of me. If we took half out of Lazard, what would be the balance between the two funds? We took half out of Lazard and moved it into American. What would be then the balance between the two?
About 900,000 to
Let's go.
1.8.
171. On page 171 shows the holdings.
Okay.
And so the question is, just to kind of get Dave from the fire. Well, I don't have the fire. So for the police, it's got 1.3 million with American New World, and Lazard is 1.8 million. Is the goal to get it 50% each, or take 50%? That's right.
Well, that was my question. I was thinking we could take 50% of it and move it.
Oh, okay.
That way we would have a significantly lower than 50% weighting in Lazard.
Okay.
You want
I would
to
agree with that.
You want to take 900,000 then, just to pick a round number?
Or we could take 800 just to make it $1 million. But anyway, whatever. I'm fine with either.
All right, why don't we do that? If that's okay with everybody on the police side, we'll take it down to $1 million. So whatever that. So
that's so around 800.
It's just called 800,000, Dave.
Yeah, whatever. Tom, what's the easiest way to do it? You want a round number?
A number. Yeah.
Okay.
Well, I mean, I think saying 800 or 900, whatever it is, would be
okay.
good.
So if I make a motion to take 800 from Lazard and move it to American New World, that's okay with everybody? That what they want? That what the group wants?
Yes. Yeah.
Okay. So
Yep.
let me let me make a motion to move 800,000 from Lazard Emerging Markets to American New World, with the provision that we will review the rest of the Lazard position at the next meeting. Can I get
Second.
I think we need a first. That was the motion.
Oh,
Collins will,
okay.
Collins will move motion.
Okay. You know, Pat, then Jeff seconded it. Roll call.
Yes.
Davidson, aye.
Aye.
Mr. Kinzel?
Kinzel.
Aye. Mr. Collins, aye. Mr. Sokolnik?
Aye.
Mr. Paulson?
Aye.
All right, so from the police, the motion carries. Chris, on to you guys.
Dave, do you want to make the motion, and how much do you want to take from Lazard?
I mean, we could take 700 and that would put them, or, hey, you know what? Why don't we take 800? Let's just mirror theirs, and that'll be a start if we're going to review it again.
I'm fine with that. Mark?
I'm fine with that.
All right, Dave, you want to make the motion, and Mark, you want a second?
The motion will be to move 800,000 from Lazard to American New World with the provision to review the remainder of the position at the next meeting.
I said,
Okay, it's been moved and seconded. Any further discussion? If not, Dave, call the roll, please.
Wait, before we do that, and it can be part of another motion, but are we still going to have the subcommittee meet
Yes.
to look at this further? Okay, does that need to be a part of this motion, or do we even need to make a motion on that?
I don't think we have to make a motion because at the moment it's a standing committee, a standing ad hoc committee.
Gotcha. Thank you.
Oh, thank you. Thank you. Thank you.
Okay, roll call.
Mr. Canning.
Aye.
Ms. Malloy.
Aye.
Mr. Mitchell.
aye.
Mr. Krajewski. Aye.
Okay, motion carries. So Tom, you've got that direction from both police and fire.
I do.
Okay, do we want to move on to London?
Hey, before
Yeah,
we do
but-
that, Melinda,
Yeah.
how long is it going to take to review the the what do you call it? The
Actuary?
Actuary report.
So I will tell you that I have a very concise report to give you, and so it depends, David, on the questions that are asked.
the
So-
only reason I ask is 'cause to go through a second stock fund, and also that could be quite a while. I mean, not that I have anywhere to go, but
So
Alright.
my report truly on this takes no more than 2 minutes at most.
oh, bonus. Okay.
So
Okay.
I'm not going in depth unless folks have in-depth questions that they want to ask.
It was such scintillating reading that, I'm sure we'll all have lots of questions.
I've got pages.
Okay.
Okay,
Let's
so,
carry
but,
on.
so before I go to London, I do want to clarify though, we have from July meeting, we had these orders in for the S&P 500 at Vanguard, and that we need to address here today.
Okay.
And so that was, hang on, I think it's, let's see. If you go to page 143, that should have, the summary of recent actions.
Yep.
Okay, so at Vanguard, we have $500,000 in a money market fund that is available. It was available to fill these orders that they got filled. And so that was at, 100,000 at 2,800, 100,000 at 2,700, 150,000 at 2,600, and 150,000 at 2,500. So, we could leave them in there as such. I'm not a, what's the purpose of having, we're over allocated now. So I guess if it went down to those levels, we would be under allocated, but I just need some direction here because it's, Do we want to cancel them? Do we want to leave them in? And how do we want to proceed?
Tom, I'm going to ask a question. If we cancel them, what happens? What happens to the 500,000?
Well, that would be the next. If it's canceled, then I would ask you, what do you want me to do with the 500,000? we put, then we have to either put it in cash or put it with your money man, send it out to North Shore and send it to Weaver.
Because right now that is being included in, it is not being included in the fixed or the equity amount right now. It's showing in the fixed income piece, correct?
It's when we did that asset allocation for the, including North Shore,
Yep.
we showed that as cash under
Cash.
fixed income. Yes.
All right. Okay.
This is Jeff. I think it's stale and should be canceled.
Okay.
Why don't we do this? If this makes
What?
sense. Why don't we cancel the orders and then we put in if there's a 10% move or a large move or whatever we want to say, then we call, we think we can do these special meetings in a couple of days and we can, because it's too hard right now to say, oh, we're going to pick a number and leave something out there. You know what I mean? So I think what we did in the past, I think the market's stable enough now that we can just react if we need to, like we did in the past. Melinda, are you nodding yes, or are you
No,
rocking in the chair?
I'm rocking in my chair so my light doesn't turn off, because that's what happens if I don't move.
That's
But
gonna happen to me too.
But beyond that, so then the thought becomes, so Dave, what do we do with the 500,000? Do we put it in Vanguard right now, and then that's going to put us way over on our 65% and move it out at the end of the year into North Shore? Or do we want to move that money right now into fixed income?
Yeah, I'd be happy giving it to Weaver, who's been spectacular, really. But
I don't think we ought to park it in North Shore. I mean, we've got at least 2 months. So finding a home at Vanguard or Weaver seems fine.
I like what Dave suggested is maybe edit the orders, and then if the market does drop to those levels, we're going to need to buy equities anyway. And if not, then we're still somewhat level at our 65-35, and Tom and Melinda have that discretion to sell if we need to at the end of the year.
So Dave, so are you suggesting that we keep the 500 sitting there and we're just going to change the triggers?
No, what I was suggesting, maybe I wasn't clear, is we cancel all the orders.
Mm-hmm.
And then we just say, if the market drops 10% or something, pick a number, we call a special meeting to reevaluate what we're going to do. Which is what we essentially were doing in the springtime when we had movements. Because now the market's, where are we? 3,600? Where are we, Tom?
34 somewhere.
34. So, we're 600 points above. So, they drop to those levels, we'll reevaluate, which is essentially.
Okay. So that's what I thought you were saying. But because I think I heard something from Dave Krajewski then. So Dave, would you be okay with the 500,000 getting moved out of Vanguard, their money market fund, and going back to Weaver?
Yeah, I would be fine with that. My only concern was that with volatility, like what Dave was saying, if it does drop and then we're selling Weaver again and putting it back in, I just remember there was a lot of moving parts to get that money back in. So even if it's not the whole 500,000, I don't think it would be a bad idea to leave a little bit in there if it does make a 10% drop, and we do need to buy equities. But I'm okay either way.
So this is Tom McShane, Dave. I think right now we have a good cash position. I think we have flexibility more so than we did back then to move money from, if the market, if we took the 500,000, put it with Weaver, that's one. If the market drops 10%, 15%, and we call a special meeting, I think at that time period, we have, I think cash, if we had to take it to North Shore, then
Cash at North Shore.
Pardon me?
Yep, we have the cash at North Shore.
Yeah, I think we have some, we have a decent cash position in North Shore for your payments and excess that if something happened, we could more easily maneuver. So I would, from perspective of operationally, if we leave it there, I think all of a sudden you have a lot of cash around. And it's,
that makes sense. I didn't realize our cash position was that strong. I just thinking about last time. So no, that makes sense.
Okay, so we'll wire that money to the North Shore, and then you wire it to us at the Weaver account, right, Melinda?
Tom, can you say that one more time?
So we're going to move the money, the 500,000 of cash that's currently. Hang on one second. I'm going to cancel the orders that you've given me to buy at those levels.
Yep.
And I'll take the 500,000 from Vanguard, and they're going to wire transfer to the North Shore Bank.
Yep.
That's the only place it can go from Vanguard. It's set up that way. And then you'll wire it to the account at Weaver at
Yep.
Morgan Stanley,
Yep.
and they'll invest those assets.
Yep, it's
And
going to be the same
no-
path that we did at
But-
the end of July, August.
Right. So
Yep.
if we do this Monday, you'll get it Tuesday, and we'll get it from you on Wednesday or Thursday, something like that.
Yep.
Okay. All right. Let me make a note of that. Okay. Okay. All right. Okay.
So do we need a motion for?
Oh yeah, right.
Yeah, Dave, why don't you go ahead and start on police?
Okay, so let's do these in pieces because I think it'll be easier. Let's make the first motion just to cancel the outstanding orders of the VINIX. I think that's probably a very simple motion. I make a motion to cancel all the existing orders of VINIX with the buy positions that we have in place.
Okay.
Oh, Pat,
Oh, I
you-
thought we needed to make a motion. Someone else needed to make a motion. So you've made the motion?
I made the motion, so now I just need
Okay.
a first.
Okay, motion, Jeff.
Pat, I think I heard you second it.
Okay.
Okay, all in favor? Aye from Farina.
Kinzel, aye.
Collins, aye.
Mr. Colnick, aye.
Paulson,
Aye.
Okay, the second motion I'm gonna make, and that cash is at Vanguard, right?
Yes.
Okay, a motion to, and do we want to move it to Weaver? I mean, I just kind of said Weaver because they were doing well, but
So
Yes,
I
Weaver.
looked
Weaver
at
is
the other
good.
ones that we
Weaver's
have,
good.
and they are doing the best, right? Between them or SKBA.
I mean, I'm
I think-
indifferent.
I think Weaver works out well. I think they're more flexible, and they have a better corporate bond desk to make
Okay.
decisions whether going to treasuries or corporates.
Okay, so please, you guys okay with that?
yep.
Okay.
Yes.
So, oh, sorry, I didn't mean to cut anybody off. Sorry. Okay, so I'll make a motion to move 500,000 from the Vanguard cash fund to Weaver. Can we get a first, please?
Motion, Kinzel.
And a second?
I'll second Paulson.
Okay, so then we can have a roll call. Farina, aye.
Kinzel, aye.
Collins, aye. Skolnick,
Aye.
Paulson.
Aye.
Yeah, so both motions carry. On to you guys, Chris.
All right, I'll make a motion to cancel all outstanding orders of VINIX.
Is there a second?
Second.
Discussion? Hearing none, call roll, please.
Mr. Canning,
Aye.
Ms. Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Gajewski, aye.
Okay, motion carries. Next motion, Dave?
Motion to move 500,000 in cash from the money market to purchase Weaver.
And the cash is the cash that's sitting in Vanguard at their S&P 500 account.
And move through North Shore Community Bank onto Weaver.
Yes.
Okay. Mark, second?
Second.
Okay, any further discussion? Seeing none, roll.
Canning,
Aye.
Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Gajewski, aye.
Okay, Tom, do you have the direction you need on that?
I do.
Okay, do we want to circle back to London?
Okay, so, yeah, I have, on London, I don't have the data that I provided for Lazard. I do have the data if I look at, starting on page, 183, and that shows you the year-to-year returns for the various small cap managers that we have followed here. And looking at the let's say that, but probably the best, looking at the bigger picture would be somewhere along the lines of, say, on page 191 is looking at the 7-year risk return analysis of these managers, mutual funds, and and basically, you look at London, they've had less return, but they've taken less volatility in the portfolio. Looking, not just looking at the hot dot, but Aberdeen is certainly has provided. That's the blue dot. They returned for the last 7 years. The average return is 11%, and they're a little aggressive in their portfolio. They've had some good stock selection. The Goldman Sachs is more of they've got they were up 7.21% versus the benchmark of 7.17, and they have taken equal risk and have been kind of right on the benchmark. They're almost like theoretically just by the index, and as opposed to utilizing them. JP Morgan has a more aggressive portfolio. They're definitely not London company, but they're not they're more growth tilt. And then what you call it, Clearbridge has a growth tilt as well, and they've had some poor stock selections there. But the ability to get good small cap managers are it's a lot of them have gone away. In other words, they're closed. They're not, and so I would say that these candidates here from looking at Eaton Vance, which we just bought them. Oh geez, Morgan Stanley just bought Eaton Vance, and the JP Morgan. Those are a couple funds that JP Morgan we've used in other accounts, and so I don't know if we want to make a decision here or leave it to the committee, but I don't have the side by side that were delivered, but I had the same ones that I delivered for Lazard.
Could you talk a little bit about your experience with JP Morgan?
Well, the JP Morgan is a blend manager. They do tilt towards growth. They've got a good bench as far as their research is concerned, and they've taken more risk than the benchmark, but not significantly, to the point where their alpha shows up as 4.27, which is pretty good. So it's been a good, of course, it's been a good experience.
But you've used them in other funds?
Right.
How about Aberdeen?
Aberdeen, I haven't used as much. The Aberdeen I have not used as much. I can't speak to them as well as I could on JP Morgan.
Okay.
Now, what I find interesting here is if you look at the Russell 2000 value on page 183 there, your returns, the value index was at the 98th percentile, so really bad, which just kind of shows you how, again, back to the same point we were making last time, how the value guys have really done just horribly versus, like you got a guy with a, the top quartile is a super aggressive guy. So, it's, I worry, as you said, use your term, chasing the hot dot.
Mm-hmm.
It's actually shocking that the index is that bad.
Mm-hmm. Right. So if you go to the next on page 184, that will give you a perspective of, this is a scattergram, and that red dot on the left is your Russell 2000 value, and then the blue box in the middle at the bottom of that box is the bottom of this quadrant is the Russell 2000. And Goldman Sachs, obviously is closer as far as their style is concerned to that. And then the other thing, Dave, is these guys, the small cap manager, who's really a small cap manager, and of Eaton Vance is probably $2 billion capitalization, $3 billion capitalization on investments. London is leaked into the mid cap range, and you might as well just put it with Acorn, the Columbia Acorn. But so you can see that London is more of a value tilt, and it's obvious in their performance. So I mean, of all these, we've, the most recently have been, we've had some comfort level with, JP Morgan and it's, but, it's.
Tom is, I'm just trying to look at this chart quickly, but so is Aberdeen, looks to me like it's kind of a blend style. Am I reading that correctly?
Yes.
It's kind of right in between value and.
Right. No. Look at Aberdeen. Aberdeen. The Aberdeen is more of a tilt towards value. It's. Eaton Vance would be more of a blend. Are you looking at page 184?
Yeah. No. So it is. It is more toward value. Yeah. I was reading the.
Right.
Reading the graph incorrectly.
Yeah. So the Eaton Vance is more of the the core.
Well, Aberdeen's record then for being that value oriented is, if they're truly shaded 3/4 or more of the way toward value, they have a phenomenal returns then.
Right.
And I guess one way we can slice and dice it is to put part of it into theirs and part of it into JP Morgan. Or if not, I would be in favor of putting all of it into, and I guess we could, bringing too many ideas up, and I'm also throwing out just putting something in a small part of it in a Russell Value Index fund.
Jeff, are you comfortable moving? It doesn't seem like Tom had a chance to do all the work we would normally do.
Oh,
I don't know. It seems like, you tell me, Tom.
Yeah, I in other words, if it was discretion, I'd have one thing. I think we should talk more. I think you need more information than I have in front of you, and I'm trying to bounce back to where I have my data, and I'm just kind of getting locked here on the computer. But
it would be good to dig in more into what they own and really look at their holdings and everything.
So the if we put it forth to this committee, and we can the subcommittee meet and then dig deeper and make that recommendation as I should have done the last time around.
Yeah, I think that makes sense.
That's fine with me. We can table it till next time. If that's
right. I was going to say on fire, do you guys just want to table it and let the subcommittee do a deeper dive?
Yes.
Yeah, that sounds good.
All right, Melinda, do you want to make a motion to table item 8F, manager review of London?
So moved.
Mark, second.
Second.
Dave, roll call.
Mr. Canning.
Aye.
Ms. Malloy.
Aye.
Mr. Mitchell.
Aye.
Drewski. Aye.
Okay, and just Melinda, for the next agenda, If you would just identify that one as we need a motion to remove it from the table before we can begin discussion.
Yes.
Thank you.
All right, on the police side, a motion to table item F, manager review, Lazard. I'm sorry, excuse me, E, London. Check that. A motion to table the London manager review, London, item 80 on the agenda.
So moved.
Okay. Second, Pat.
Yes.
Okay. Roll call. Farina, aye.
Kinsel, aye.
Collins, aye.
Sokolnik, aye.
Paulson, aye.
Okay. We're good. On back to you, Chris.
Okay, Tom, is there anything else you need to do under section 8? I don't think so, but I just wanted to check.
No, the only other thing outstanding is that investment policy statement that maybe, yeah, that's
All right, well, let's
not.
leave that alone. Let's move on to the next item under 9A, the 2021 meeting schedule.
So that's on page 224. So does anyone have any issues with the proposed dates? I simply followed the same sort of matrix that we have used before in the past.
No.
No.
Great.
Okay, so you're just spreading that of record. Please put those in your calendars. And now get your stopwatches out for Melinda's 2-minute report on the actuarial reports. All right,
So-
Melinda?
Chris, we don't have to approve that or anything, right? The schedule?
Oh, no, actually, you're right, Pat. We do need a motion. Melinda, do you want to make a motion on the dates?
Sure. My motion is that we adopt the dates as they appear on page 224.
Okay, Mark seconded. Dave, call roll, please.
Mitchell,
Aye.
Mr. Canning,
Aye.
Ms. Malloy,
Aye.
Krajewski, aye.
Over to police.
Okay, a motion to adopt the dates as depicted on page 224 of your packet.
Motion.
Okay, second.
John on the second.
Okay, Farina's an
John?
aye.
Is that John?
Kinsel, aye.
Sokolnik, aye.
Collins, aye.
Paulson, aye.
Okay, back to
Okay.
you, Chris.
All right, Melinda, over to you for actuarial reports.
So I'm just going to use the fire one as my example. If folks could scroll to page 229. This is page 5 of the firefighter's pension report. This is a good place to start to understand big picture what has happened. So you will see how much of the contribution was made by the employer versus the members. And you see it as a comparison to the prior year. I strongly suggest you look at page 6 of the same reports. And the reason is this is going to lay out what are the changes that have occurred from the prior year in terms of assumptions that were used in the valuation that impact then or it's one of the large pieces that impact the required contribution. So in 2019, one of the big things is that there was a public act passed that affected tier 2 benefits, and it did cause an increase in our liabilities. The other piece that caused an increase in our liabilities, but it really in the to address our long-term liability is moving to a 15-year rolling amortization period. And it lays out that the plan is to do it in a phased way. So 2020 was the first year of that. And then if you look at page 8 of the report, which is on page 232, one of the other things to take a look at here is to monitor where we're at in terms of our funded ratio. Various entities look at and calculate now funded ratio differently. And by that, I mean, further on in these reports, you are going to see that there is analysis that is done for GASB 67 and 68. So in our audit reports, there is one way that our funded position for the pension funds are reported. If you go to the rating agencies, when the village is issuing the bonds, they do their own calculation in terms of how they see our funded level. But when we've had our discussions before in the past, this funded ratio is what we have always talked about. So you're going to see that there was an improvement from 2019 to 2020. So even though we had that increase in the liabilities that I talked about before because of the changes, our investment returns were such that it helped actually put us in a better position. As we go to that 15-year position, what we're doing is we are starting to chip away at the unfunded liability, because if we had followed the state method, which is to be 90% funded by 2040, it is backloaded in terms of how you would make that contribution, and therefore the unfunded liability is growing. There is now legislation that is out there, and I think you'll recall that from the reports that we had from, I think it was from Reamer's law firm, where he notes that there is now legislation to move that 90% funded goal from 2040 to 2050. That's already been granted to the city of Chicago. So as that goal moves out, all it does is it allows the unfunded liability to grow. Are there any questions about that? Because I see a smile on at least one trustee's face. There is actually a calculation embedded in this report that would show you what our required contribution would need to be if we followed the statutory requirement. That's on 239. So that concludes my report on the actuary reports, unless I have any questions from any individual.
Linda, at the risk of sending you over your 2 minutes, there's two different calculations that show an unfunded ratio of, I think one was 62 and one was 72.
Yep.
Can you just, what's the difference in that math? Is that just two different ways of doing it, or? Yeah,
Yes.
So if you look at page 233 versus 232, one shows 62 and a half and one shows 72.
Wait, tell me the two pages that you're looking at.
230, let me just make sure, it's 33 and 232. So at the bottom of 232, it says funded ratio ABA/AL 62 and a half.
So on that one, it's telling us it's using the MVA divided by the PVAB, which
for those of us who don't speak acronyms, what does that mean?
I don't speak actuary language either, so I'm not trying to be coy, but I am going to tell you that that I can come back and I can get you what is the two numbers that make that up. Off the top of my head, Dave, I can't tell you what that is. I think it has to do with the market value.
Okay.
But before I commit to that, I would have to go back and double check.
And then the other one on page 233 shows us funded ratio MVA/PVAB at 72.
So that's the one that I think we were just talking about, the 72. And I think that's taking the market value of the asset divided by the present value of the benefits. I believe those are the two numbers that make up that percentage. That's never a way that we've sort of looked at ourselves, but that doesn't mean that you can't, right? You can, that in some ways, Dave, that was the point that I was making when I started this. As different entities look at the health of these pension funds, the way they slice it and dice it changes from entity to entity. So one of the things that they will look at that causes us to look different is the rating agencies, instead of using our assumed rate of return, they apply their own rate of return that actually is tied to a corporate bond. If we look at the GASB 67 and 68 calculations that are happening, there is no smoothing that's occurring. So what you see when you look at our valuation over time is the smoothing allows us to, as it would indicate, it gives you an easier way to see the progression, what's happening in the funds. If when we don't have that smoothing, this past year in 2019, where we had excellent returns, especially compared to 2018, in our report year over year, you see huge spikes going back and forth. So it's hard to determine where the trajectory of the health of the fund is going.
Gotcha. Okay. Fair
So
enough.
for us, in the way we have always looked at ourselves, and not just us in terms of Wilmette, but the standard that it was until the recent past, and by the recent past, I would say over the last 7 to 5 years, has been the figure that you see on page 8. And it's always been called the unfunded liability, the percent that we're funded. So just for us to think about how we have progressed over time, we are seeing that actually improve over the past several years. So our trajectory is going in the correct way.
Okay, thank you, Melinda.
Are there any other questions from folks? So fire, as we just saw on this page, is a little over 62% funded, and the police, when you look at the similar page there, is 65% funded. And it was an improvement year over year. Okay, that concludes my report on the actuary reports.
Okay, let's move on to investment policy. Investment policy would pertain to both police and fire. The packet only has a police policy. So Tom or Melinda, who wants to take that one?
I'll take that one. So since only the police is being presented here, but the concepts would apply to fire, I think the best way for us to handle it is let Tom walk through the police one. And depending on what happens from our discussion here, in a subsequent meeting that fire has, we will have Tom then present us with a fire amended investment policy statement. And we can approve it at that time. Tom, you want to take it from here now and walk through?
That makes sense to me, Tom.
Sure. Okay. Yeah, sure. I'll just, I'll keep this in 2 minutes as well, but we didn't make a lot of changes. What we did do is a couple thoughts on page 320 under investment goals. You know, we put in, you know, a 5-year investment return that exceeds the assumed actuarial rate of return, as opposed to before it was inflation and along those lines, the you know, 300 basis points above inflation. So that was you know, one for discussion. And then we wanted to clarify right below it, you know, the investment policy you want to make not vague, but you want to have it flexible, so it's not, you're not stuck in an item. And so we did add next paragraph down, we had before the limited to you know, best return that represents the asset allocation of the fund, and the indices. We had put in there the Russell 3000. We changed it to the S&P 500 because that's what we mostly used. And though we used whatever benchmark represents the portfolio or the manager. And the other change we made was going just.
All right, you want to talk about sustainable investing?
Well, I don't want to, but I will.
Page 323.
Right. So that's language that's been asked to put in by the states. You know, the state legislators have put a part of this act to put in the sustainable investing, which says the board will consider any material relevant. You can read it for your own edification, but it's essentially kind of the you know, the environmental investing, sustainable investing, you know, and it's I think all things equal, if you look at something, you can, you know, you should consider that. And so just one more item on your plate to consider. But and I got this from a couple of attorneys who for these boards that use this language. Okay.
So
and,
Tom, I know we needed to address the Sustainable Investing Act. And I think if folks look out there, there's training related to this. And I guess we would need to think about, Tom, how when we have discussions, like even at the discussions that we had today, how would we incorporate this consideration in there? And and how have you done it with other funds?
Well, Melinda, it's a good question, and I haven't done that. It's a new process that has. I believe we have a group in New York that can and will be helping us provide that information, but I haven't really had a search where I've used this language. Hasn't been in. It's just getting into most investment policies over the last month or so.
Okay.
So,
Melinda, I mean,
yeah.
Given we do mostly mutual funds, or not mostly, exclusively mutual funds, and not individual stock selection, I mean, the only way we could, because we don't actually know what people own unless we kind of go digging through it. It's sort of like, I mean, does your firm, when they review funds, give funds like a sustainability or some kind of rating? Otherwise, we have no way of knowing. And in any given day, because we're not giving instructions to these guys, we could be dead set against owning Exxon, and then one of our holdings could turn out and buy we have no way of knowing that. So unless that's something you guys put in your reviews of the funds, we have no way of knowing who's owning what, when, and where.
Dave, do you remember we ran into this problem when the legislature wanted funds to divest from anyone who had investments in Sudan? And Coca-Cola had a bottling plant. And Coca-Cola is part of the S&P 500. So every fund that had Coca-Cola, arguably you had to divest from. Ultimately, there was a federal lawsuit that said the state couldn't do that. We held our position. I know Glenview divested of all their holdings and had to redo things. So I think your point to Tom is, well taken.
Yeah. So, we have information that will help us in this area and help you as a fund if these are sustainable. So I will circle back with that. But this is language they've asked to and put forth. So I believe that if there's an unfunded mandate, you got to fill that mandate with, and so we need to come up with a solution. And so we can talk further about this at the next meeting.
Well, and to me, Tom, and maybe this is something you go back to your committee with. I mean, if we have to do this, which frankly, I'm not wild about. If when we pick a new fund, if there's some kind of rating, A, B, C, D, or 1 to 10 or whatever, and we got two funds that are a tie, and one's got an A rating and one's got a D rating, you pick the A rating. I mean, to me, that would be something that would be reasonable, but I don't know if that's something that's in.
I'm pretty sure we have that. I haven't utilized it. It's I can circle back, but I'm sure we have a rating, and our firm is very much involved in ESG, investment and sustainability investment. And I know we have. I just haven't pulled it up and utilized it and identified that.
Okay, fair enough.
I'll circle back with that. So really, is the language acceptable? And then the I will get back and report how we might help identify if your investments are sustainable.
Okay.
Melinda, do we have to approve this now, or?
So, you don't have to. We could say that we are going to review it and tweak it again, but the problem that we have is that the state did pass this, and they are looking for us to have our investment policies updated with the act being a part of it. So that is the expectation that we are supposed to get this accomplished.
Okay, well, I'm going to confess that I didn't read the whole document. So before we, I mean, do we just? I mean, I looked at the changes. Is that sufficient?
Well, so I'm going to say it back to you this way, Dave. I know that we need to include the changes that have been made in state statute into these investment policies. My bigger concern becomes, even if we put it in our policy as we're required to because of state statute, what we don't understand, and that's what we've just talked about right now, is how are we going to make sure that we're in compliance with our own policy, and that we need more guidance from Tom. So I almost think, Dave, we're in the position, we need to put it in the policy because we have to. And then the other thing becomes, we need to figure out how we're going to make sure that we're in compliance with it.
Okay. All right, well, I'll be honest, I don't feel like I'm in a position to approve it because I really didn't read it, the whole thing that closely. So if anybody else feels like they've spent enough time on it.
Let me offer this idea, because fire has to address a couple things. We are going to have another meeting probably in November. It's our intent to have Tom walk through the fire investment policy. And Tom, I know this is news for you. Probably the week before Thanksgiving. So that ought to give, a few weeks to come up with some stuff. Our meeting is going to be limited to a couple topics that we're going to table here. I'm just wondering, Dave, Farina, if once we're done with Tom, if you guys want to have a short meeting on the same day, just maybe a half hour later. So we can start with Tom, and then when we're done with Tom, he can go over to your meeting, and then we've got to meet with Carolyn after that.
I mean, I'm fine with that, or, I mean, if it doesn't need to be done now, why can't we just, like I said, I'm fine with doing that, or we could just approve it in the next meeting. Do we need it now?
I think
I don't
we're
know.
supposed to get it done this year.
Okay, then, I mean, if the rest of the membership is fine with what's in the language, I'm okay with it. I mean, it's.
Okay.
I mean, there's nothing in the statutes says, I mean, obviously it'd be better to get it done this year, but there's nothing that requires us.
I'm not going to speak to the legality, and we could reach out to both the attorneys on it, but I know from other papers now that we've received from Carolyn, that was going to be part of the rules that we have in place as well. So, Pat, I can't respond that we weren't supposed to get this accomplished this year, because I actually think we are, but I could be wrong.
Can I just jump in, Tom McShane?
Yep.
Why don't, what Chris Canning was saying, why don't you look at it, review it? We can have a short meeting and tying into your November meeting.
Mm-hmm.
I'll have better information about how we're going to monitor this, and you can decide then. And then that would be, if they approve it, then it's approved by year end. That makes sense?
Yep. And then Tom, can you just clarify for us with your other funds? Are you updating all of the investment? We're supposed to review this once a year anyways, but are you going through this, all the other funds?
We're muddling through it. Yes, we are. Yes. We got to put sustainability language in it. We're trying to get it done, and most of them are trying to get it done by year end, so that so they're on task.
Because we need to supply our investment policy to the Department of Insurance.
Right, exactly. So
that is one of the things that they'll be asking us about. Can you do me a favor? On page 324, can you tell me what's causing the revisions to the minimum and maximum? Can you give us a sense of that?
Yeah, sure. Just the clarification of the language that about the 65%. The identification that the 55% of your portfolio can be invested in individual stocks. If you want to go beyond that, it has to be in mutual funds. So it's language we put in the investment policy so that it's more clear than what was in there before. It's kind of a clarity of the language that says, as opposed to, you can't have 65% equity and have it all in individual security stocks.
Okay.
Your fund, it's not an issue. You have minimal separately managed accounts, but point is that it's try to clarify the language you had in there before that was a little bit busy.
Okay.
And that's
And then there's a section that you took out, if we look on page 327.
327.
Section.
Oh, so that took out because we were, from various other discussions, that doesn't really pertain to the investments of reports to the municipality. The estimated amount required during the succeeding fiscal year to pay all pensions and other obligations. We didn't think it should be in the investment policy. The funded ratio of the fund. I mean, you can put it in there, but it gets the funded ratio is important for the actuarial report, not for the investment policy.
Okay, I think on that one, we might need to have, because again, if I'm thinking about some of the stuff that I saw from Carolyn in terms of the rules that she was suggesting for the board, I think that might be one that we would need to have looked at to see if we should have it in there or not before we take it out. So knowing that we're going to meet again, that's one where I think, I don't know if we should be taking that out or not, but we can look into that further.
Okay.
That was all the questions I think I really had on this, unless other folks had some at this point. Oh, I think there was another restriction one. Tom, on page 331, can you tell us about item number 4 that's being added, I think?
Hang on 1 second.
Sure.
Okay.
Diabetes.
Which page?
It is on
331.
331.
Talking to ADRs.
Yeah.
Yeah.
Well, you're not allowed to buy American Depository Receipts by state statutes. And so we put that in as a restriction.
Okay. Has that always been the case, or is that something new that came out in statute?
No, it's always been the case.
All right. So this was just a thing that a cleanup item then that should have been in there maybe before.
Yes.
All right. Okay. Those are my questions on this, unless somebody else has some.
So I think fire, since it's on your agenda, you should table it. And I'm sorry, police, you should table it. Fire, we don't have any action.
Okay, I see. It seems like we don't have enough. We can't approve it anyhow since there's a couple things still needing to be finalized. So, so Linda, it's your opinion that we should attach on to the special meeting in November and approve it then, or can we do it in January?
I think that we should try to tackle this all in November, unless we find out that we don't have to have that sustainability language in our policy until January. So I think that takes reaching out to the attorneys to verify.
All right, so we'll make a motion to table it, and do we need a motion to have another meeting, or we just have to notice it, right?
You just have to notice it.
Okay,
Yep.
so we're gonna make a motion to table the investment policy review and update, item 9C.
Motion.
Okay, second. Somebody, Pat.
Collins.
Okay, all in favor, aye.
Aye.
Farina.
Aye.
Farina, aye, sorry.
Genzel.
Yes, aye.
Collins, aye. Sokolnik.
Sokolnik, aye.
Paulson.
Okay, the motion
Aye.
passes.
Okay, next item on the agenda are board rules for the firefighter board. Carolyn did a nice job, but Linda and I have a bunch of questions. And so
I'm sorry, Chris, Tom McShane. Can I be excused? I have another call to make.
Yeah. Yes,
Okay.
Tom, go ahead. Thank you very much. We'll reach back to you with some November dates.
Okay, great. Thank you. Bye-bye.
Okay. As Melinda and I thought that a better way to handle this for the fire board was to schedule another meeting and have Carolyn make a presentation about why she created the board rules. Make sure that we understand what they are. In many cases, they codify what we do on a regular basis, but there are a couple little nuances that I think we need some clarity from her. So Melinda and I were thinking that we would table this item to a meeting, say the week before Thanksgiving. We would also pick up the investment policy discussion. So we'd have Tom for a short period, then Carolyn, and then we would also do the semi-annual review of closed executive session meetings and knock off those three things in one meeting. Melinda, you want to weigh in on that?
I think you did a really good summary of the action that I think we ought to take. So I would move that that is the action we go forward with.
Is there a second?
Second.
I'll second.
Okay, it's been moved and seconded. Any further discussion? And then before we all leave, we're just going to talk about other dates, but let's just keep moving this along. So it's been moved and second. Please call roll.
Mr. Canning,
Aye.
Ms. Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Grajewski. Aye.
Okay, so on the fire side, the investment policy, board rules, and semi-annual review of closed executive session minutes are all tabled to a date in the future, which will be determined later. Next item on the agenda is fire disability matter update, Lance Burns annual evaluation. Last we were told about 10 days ago was the evaluation was in progress. So there is no further update. Once we have it, we will report back to the board. Over to police on disability matters.
Chris, do we have to do the semi-annual or do we just table it too?
Do you have any that you need to review?
Would have been the current one. But there's nothing that, none of the meetings are, it's determined that they're all confidential still, the ones we have.
I think, Pat, it might just be one of those things that if there's no action to be taken, then that's something that should be articulated at the meeting and agreed upon. So even if you're not going to, so that in itself is an action, I guess is what I'm telling you.
Yeah. No action is action.
Yes.
So basically, I mean, it would basically, from the pursuant to section blah, blah, the Board of Trustees for the Wilmette Police determined that the need of confidentiality still exists as to all closed session meetings not previously released, and the same shall not be released for public inspection.
And is that the action of the board?
Yes, that would be the action. So the motion to hold the need of confidentiality still exists to all closed session meetings not previously released, and same shall not be released for public inspection.
Okay, and if everybody agrees with it, then let that be the inaction or action, and let the minutes reflect that.
Do I need a roll call for that? All right, so do we have a, I'll approve the motion. Do we have a second?
Second.
That was Jeff. Okay, roll
Yes.
call. Farina, aye.
Kinsel, aye.
Collins, aye.
Colnick, aye.
Paulson, aye.
Motion passes, sorry.
Okay, on police disability matters, Dave?
I'll turn that over to Pat.
Okay, the decision and order was sent out. Do we have any further review or discussion on the decision and order?
I have nothing further. I mean, I
The
read
application of Sam Walker.
there was a couple of questions that were in the email train, but I assume they've been answered. So
Yeah,
Yeah, all those have been addressed.
okay.
Can I ask a question really quick? So nothing was contained in the packet of material that was sent out. So is that So when you guys are discussing this right now, Pat, was that material that everyone has reviewed then?
Yes, it was the decision order that was sent to us to send to the trustees.
Okay.
So do we just need to approve that order then, Melinda? Or is that,
Yeah,
how's that done?
according to the attorney, we just need to have it on the meeting, just review it, discuss if there's any discussion of it, and then we make a motion to approve, adopt, and publish the decision and order.
Yeah, and that's how I read it, Pat. I think you got to do that.
All right, so I just need a motion to approve the order that we've all seen, but it's not in the packet.
Yeah, I
So
don't think-
the publishing happens how? Just out of curiosity.
The next, they'll be attached to the minutes?
Okay.
Is that sufficient, Chris?
I don't know.
Yeah, because the minutes are a public document.
Okay. All right, so.
I mean, this isn't something we're putting into Wilmette Life.
Not yet. Okay, so I just need a motion then to approve. Well, first off, is there any other discussion on the disability order for Sam Walker? Okay, hearing none. A motion to approve the application, disability application of Sam Walker. Is that all I need?
Motion to approve, adopt, and publish the decision order in the matter of the disability application of Sam Walker.
Okay, as Officer Collins says, I'll first that motion.
Second.
Okay, all in favor? Aye, Farina.
Aye, Kinzel.
Aye, Collins.
Aye, Sokolnik.
Aye, Paulson.
Okay, motion passes. I think we're finished. Except for the
Okay,
last-
next on the conference, seminar, and training discussion and approval.
Can I stop you for a second? So Pat, I think what you need to do now is, since that's been approved, can you send that over then to payroll? Because that's the backup documentation we'll use to affect then the first payment to Sam.
Yep, I'll have to do a little running around to get signatures on it. I have to have all the trustees sign it, and the certification part, and there's a couple other forms.
Okay, so if the idea is to get him paid with the October, I'm going to need that fairly quick so that we can get the pension payroll done, because it goes out at the end of this month. And I know as Lynn is sitting there looking, she knows the deadline. We would want this information so we could get the payroll piece taken care of. If we could by the end of, holy cow, could we get it? I think we need it by Monday, so that we can actually have it with the October pension payment.
So Dave and Jeff, I think that means that a squad car is pulling up in front of your house, and you'll have to go sign something.
That's fine with me.
Okay.
I can
Not
run
the first time, right?
No, hopefully not. No, it is. No, the pack comes by frequently with stuff for me to sign. So, yeah. Marty, do you have an issue? Or
I'm not going to be around. If I'm heading out in the morning for the weekend, so if it needs to be done by Monday.
DocuSign.
You need the executed copy, right, Melinda?
Please.
All right, so Marty, I'll swing by tonight when I'm my way home, and then I'll grab the other signatures.
Are you around tomorrow, Pat? I can come by my house tomorrow anytime. I'm around tomorrow.
I'm actually off tomorrow, but
I can go by. If you want to leave it at the police station, I can run by. It's only.
Yeah, but you're not. You're going to Marty's house tonight, not coming in tomorrow.
right. So I can swing by yours and Jeff's tonight. You're good.
Yeah, that's fine.
Yeah, I'm around.
All right.
I mean, I'm downtown. I won't be home till 7:30ish. But
And then John, I'll hook up with you.
Yeah, I'll be in the morning. I'm on day shift tomorrow.
Okay.
You're right.
All right. Okay. Conference, seminar, training. Melinda, how do you want to discuss this?
Yep, this should be quick. So again, material has been included starting on page 408, and then even as you read through some of the information that we received from the attorneys and information that we received about the consolidation. So there is lots of different places where training has been indicated, but I need to stress that all of the trustees are supposed to have training on this consolidation. It's articulated, I think, in later material. You need to make sure that you have attended one of those webinars so that we can get the certification that you've had the training on the consolidation. That does need to happen for all of us. Any questions?
I'll have to look for because you guys could do the webinar. I know the police had some weird thing for our 4-hour, had to be done by some college approved course.
Wasn't that in the Steve Zahn materials, Dave?
I think it was. I think Pat's saying that that's for fire is what you're thinking, Pat?
Well, I mean, if I could do the fire one, I'll do the fire one.
I was going to say, I mean, it's probably sufficient.
Whatever. But for some reason I thought ours was different for whatever reason. We had to go to some college approved 4-hour class.
That I can't speak to, but let me ask you this, Pat. By chance, did you do it?
No, because they haven't had a session yet.
Okay. So I tell you what, how about you look into that further, but it's my understanding that all of us are supposed to have this 4-hour training before the end of the year. Okay. And if it only applies to fire, at least at this point in time, I'll if I find out something to that effect, I will let you know. But it's my understanding it applies to all of us since all the
all of us are being consolidated.
Yep.
We're supposed to get the 4-hour training. And then so Colin was supposed to get the 16-hour training.
Right.
Within that timeline. But the problem with, I think on our side is no qualifying 4-hour training has been put out there.
Okay.
So I'll take a look at it and figure out what we got.
Let me understand this. So we have to spend 4 hours so they can tell us that they're going to consolidate our funds?
I can't tell you exactly what they're going to tell you in it, Dave. I just know it falls under the umbrella of this consolidation. I have yet to do the training myself.
If I could log a formal protest against 4 hours of my life being lost to
That's all I can tell you on that one so far. If I find out anything more, Dave, I will share it. I promise.
Okay, thank you very much.
All right.
All right. Do we want to do a calculation of training for today and reading the packet?
Yes, but I think we still have 2 items on the agenda under new and old unfinished business.
Well, right, but I didn't know if at this time we wanted to approve a time.
Yep. But no,
I'm July too, Chris. Chris, we have July. We didn't do July last time. To July's meeting, we didn't decide on how many hours that was.
Okay. Well, let's deal with today first.
Hey everyone, this is John. Sorry to jump in. I actually have to run into a 6 o'clock meeting. Is it okay if I sign off?
Yeah, you still have a quorum in police, right?
Yes.
Yes.
Yes. We should. Yeah. Yeah.
All right. Thanks, John.
Okay. I'm sorry, guys. Everyone.
No problem.
Thank you.
Thanks.
Bye.
Okay, so we're at 2.5 hours right now, plus a couple hours to go through the packet. At least I think. So I'm thinking we're approaching 4.5 to 5 hours.
Yep, I would agree.
Okay, so why don't we start?
Wait, Pat, are you waving at us or are you?
No. Okay. So on the fire side, Linda, do you want to make a motion for 5 hours of training?
So moved.
Mark, you seconded.
Second.
Dave, roll.
Mr. Canning.
Aye.
Ms. Mitchell.
Aye.
Miss Malloy. Mr. Mitchell. Sorry, I'm driving now. Taking the car on the phone.
Right. I will say aye as well.
Yeah.
Okay, and so that motion carries.
I apologize.
All right,
on the police side. Oh, I'm sorry. On the police side, a motion for 5 hours of training, Pat?
Yes.
Okay, second.
I'll
Second.
second it.
Okay, roll call. Farina, aye.
Kinsel, aye.
Collins, aye.
Paulson, aye.
Okay, motion passes.
Okay, Pat, was that on police or police and fire? I'm trying to find the minutes.
Police and fire, the July
Okay.
23rd.
Because we didn't have a quorum?
No, we just skipped it. I think we forgot to put how many hours that was worth.
Okay.
Dave, do you have the hours or, well, you weren't there.
I wasn't.
Oh, Jason was there. Trying to see if we made a note last time.
Well, we
Well,
just make a motion.
our meeting was 2 hours. Didn't you guys go later, Pat? Did you have an
well,
executive session?
No, not for that one.
All right, I'm going to say on the fire side, 4 hours. Mark, can I get a motion for that?
Yeah, I would move 4 hours for the July meeting.
Melinda, can you second that?
Yes, I can.
All right, Dave, can you call roll?
Try this again. Mr. Canning,
Aye.
Ms. Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Gajewski, aye.
Okay, so motion carries, so the record will reflect 4 hours of training for the July meeting.
Okay, on the police side, a motion to 4 hours of training for the July meeting.
Motion.
Kinsel.
Okay, second.
I'll second it.
Okay. Farina, aye.
Kinsel, aye.
Collins,
Paulson,
aye.
Marty,
Paulson, aye. Yeah.
okay, in here. Motion carries.
Okay, under new, old, or unfinished business, police, you've got a legal services agreement?
It's gonna have to be tabled till the November meeting or whatever meeting we have.
Okay, you need a motion to table?
Okay, motion to table legal services agreement.
Motion.
Second.
I'll second it. Paulson.
Okay, Farina, aye.
Kinsel, aye.
Paulson, aye.
Collins, aye.
Okay, motion passes. I think we have a record number of motions this
Yeah.
Okay, I think that's it, right?
Consolidation update, Pat?
Let's see, always update on my actual reports. So for the active members, we're gonna be, the consolidation board, the permanent one, is being voted on November. So ballots are gonna be coming out, to the beneficiaries and also to the, us, to vote for the permanent board. And then for the legal action, I wasn't able to confirm it. They didn't call me back, the firm. When I last talked to them, they had 4 funds signed up with them and filed this legal action to stop the consolidation. Another person told me recently he heard they're up to 9 firms. 10 was the trigger, that once they have the 10th firm, then they were going to start their legal action. So it's basically no action for us to do right now, unless somebody wants to do something.
And in talking with Carolyn, her firm did reach out to the plaintiffs and were met with a one-line response that they had not filed anything. So no further detail.
I know that your firm got, Dave got the letter, because I guess, what was it? Which organization, Dave, that is?
I got, again, sorry I'm driving. I have a dive drill going on right now. But I got a letter from the Maywood president who stated that there's 3 fire departments not affiliated with AFFI who are looking to join that class action lawsuit. And he sent me the same letter. I talked to Pat about it. And that's basically as far as I know. I was going to try to get more information to see kind of where everyone was at this meeting. I can even forward that letter on and just kind of the emails of what he said on why they were going through with this. And we can, kind of talk more then. Sorry, I'm not in front of my computer right now.
Okay.
All right, so in short, there's no action to be taken. Any further discussion on this? Okay, if not, then Melinda, can you make a motion to adjourn fire? I'm sorry, before we do that, we got to get a date. Melinda, do you want to propose? Actually, you know what? Police, why don't you go adjourn and jump off?
Okay. A motion to adjourn the meeting?
Motion?
Second.
I'll second it. Paulson.
Okay. Farina's an aye.
Kinsel, aye.
Kinsel's aye.
Paulson's an aye.
Collins is aye.
Paul.
What time?
I got 6:10.
6:10.
Okay, goodbye, everybody. Almost.
Bye.
Motion carries, meeting adjourned.
Okay, on the fire side, Melinda, do you want to offer some dates based on what Carolyn sent us?
Yes. So the dates that she was talking about is Monday, November 16th, 1 p.m. or later, Tuesday, November 17th, 1 p.m. or later, or Friday, November 20th, anytime.
Right, and I can't do the 17th,
Okay.
but I can do the 16th or 20th. Mark, what's your calendar like?
Bringing it up.
Melinda, whatever you guys decide on, I'll make it work.
Okay.
And hey, Dave, do you have a preference as to time?
Not really, no.
Okay. I actually don't think it's going to be a very long meeting. I mean, I think it should be knocked off in under an hour.
Yes, that would be my hope.
I'm good on anything that week.
Okay, then how about we shoot for, how about we look at that Monday then?
16?
Yep.
Yeah, I've got a hard stop at 4:30, but anytime before that.
So let's look at, then let's do Monday at, let's pick 2 o'clock.
All right, I'll notify Carolyn of that.
Okay.
And it will be a Zoom meeting or team, sorry.
No, a Teams meeting, yep. And then, Chris, I think we need to talk about the Department of Insurance draft exam.
Yeah, do you want to talk about that?
Sure. So it's, I know it wasn't on the agenda, but it is something that we just received last night. So we're not going to vote or take any action. I'm simply educating the board. Dave, I think you were contacted on this as well. So we know from earlier this year that both the fire and the police pension funds were selected for certification exams by the Department of Insurance. I think we have talked about the amount of information that was being requested. We were notified about this in February. Obviously, then COVID has happened. So we have availed ourselves of extensions as we could to try to accumulate all of the information that was needed and necessary. I did not know that they were completing the exam until we received their draft exam yesterday. It does indicate findings that they have. I do not think that we would agree to all of the findings that we have in there. So we have reached out to our outside legal counsel to review this. We are going to look to work with her on drafting responses to the findings. And we have also filed an extension in order to respond to those. It allowed us to ask for an additional 14 days for our responses. Does anyone have any questions about that?
So our calculation is that we've got to respond by November 18th.
Yep.
So Carolyn has already received this, has already taken a first look at it. So we will get with her in the next couple days. She has a number of funds that have similar issues, so she's already got a template on how to respond to some of these issues.
And one of the items, so everyone understands, is ultimately in the end, when as we are completing this, all of the trustees will need to sign off on it. All right, that's all I have, unless Chris, you have anything else on it?
I don't have anything. Mark or Dave, do you have anything?
I don't have anything.
Okay.
No, I do not.
All right, then if that's the case, our next meeting is Monday, November 16th at 2 p.m. via Teams. Mark, do you want to make a motion to adjourn?
So moved.
Melinda, you second?
Yes.
Okay, Dave, call roll.
Mr. Canning,
Aye.
Ms. Malloy,
Aye.
Mr. Mitchell,
Aye.
Mr. Grajewski. Aye.
All right, we stand adjourned. Thank you very much, everybody. We'll see you on the 16th, if not earlier. Melinda, Carolyn, and I will start working on the Department of Insurance response.
All right.
And I'm going to shoot her an email right now about this meeting.
Fantastic. Thanks, Chris.
All right, have a good night, everybody.